Hi, this is Prasheel coming to you from Mumbai, and you're listening to the Equity Masters Stock Market Wrap Up. In this week's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. Talking about domestic markets first, the recent correction seems to have had no effect on mutual fund investors as SIPs are only seen to be going up. Further, ratings agency ICRA believes that India's GDP might take a breather in the next quarter. Talking about the economy, we take a look at the latest updates from the RBI and the government meeting. Moving on, we have a special guest today. Our in-house technical analyst, Apurva Sheth, who is also the editor of Profit Hunter Pro, to share his insights on the trends that he is seeing in the Indian IT sector these days. So stay tuned for that. Now, a quick look at the broader markets. Asian and European indices were cautiously optimistic as crude oil prices were seen to be going down. Back home, Indian indices remained volatile throughout the week and were driven by the result season. With the markets out of the way, let's look at the key stories in focus today. While the markets are witnessing selling pressure lately, the SIP flows to Indian stock markets are in fact on the rise. SIP contributions have grown from 31.2 billion rupees in April 2016 to 80 billion rupees in October 2018, growing at a compounded annual rate of 46%. Currently, there are about 25 million SIP accounts through which investors regularly invest in various Indian mutual fund schemes. As per the industry data, the mutual fund industry added an average of about 1 million SIP accounts each month during the financial year 2018-19. All of this with an average SIP size of about 3,200 rupees per SIP account. If this trend in SIP inflows remains steady, it will provide the much needed buoyancy for the Indian markets, which have been witnessing an exodus of foreign investors in recent times. Moving on. Ratings agency ICRA has pegged India's GDP growth to dip in the second quarter of the current financial year. According to ICRA, India's GDP growth is expected to dip to 7.2% on account of sluggishness in agriculture and industry. The fall in the growth number will be mainly due to a pull down from industry, where growth is expected to slow down to 7.1% in the second quarter as compared to 10.3% in the first. ICRA highlighted higher fuel prices and a depreciating rupee as primary factors dragging the industrial growth, while an uneven and subpar monsoon will impact the farm sector. Now, the GDP had grown by a higher than expected 8.2% in the first quarter of the current financial year as compared to the year ago period. It will be interesting to see if the second quarter goes according to expectations. Now, talking about the economy, the much awaited RBI government meeting concluded in the week gone by. The 9-hour marathon meeting of the Reserve Bank of India's Central Board saw mutual agreement being reached on several issues amid the ongoing rift between the government and the central bank. According to a post-meeting release by the central bank, the board discussed the Basel III regulatory capital framework, a restructuring scheme for stressed MSMEs, bank health under the PCA framework, and the economic capital framework of the RBI. The board decided to constitute an expert committee to examine the ECF, the membership and the terms of which will be jointly discussed and determined by the RBI and the government. It also advised that the RBI should consider a scheme for the restructuring of stressed standard assets of MSME borrowers, with aggregate credit facilities of up to Rs 300 million subject to conditions of ensuring financial stability. However, the marathon meeting seemed like much ado about nothing, as it still remains unclear if the RBI and the government have yet buried the hatchet. With the updates out of the way, as promised, here's Apurva Sheth for you. Today we have Apurva Sheth, CMT and a research analyst and also the editor of Profit Hunter Pro with us. Now, Apurva is seeing a lot of similarities between Fangs stocks in the US and even Bitcoins with Indian IT stocks. So here's hoping that Apurva can share some of his insights with us. Hi Apurva, glad to have you on board. And if you don't mind, we can jump straight into the questions. Well, Apurva, what exactly are FAANG stocks?
Hi Prashil, thanks a lot for having me over here. So FAANG stocks are the five technology stocks from the US markets, that is Facebook, Apple, Amazon, Netflix and Google. So these five stocks comprise a major portion of the Nasdaq Composite Index, and these were recently down a lot. And if you look at them from their 52-week highs, then they are down more than 20%. All these stocks are down more than 20%, and they have wiped out billions and billions of dollars over the last 3 to 4 months.
Okay, got it. So what's happening with these FAANG stocks? Why are they suddenly of so much interest?
Well, so FAANG stocks have drawn in a lot of attention and money from fund managers and investors all across the world. So you see that the idea of FAANG stocks have gone mainstream, and whenever an idea goes mainstream, it generally acts as a warning bell that the ongoing trend may exhaust soon. So simply because people who missed out on the recent rally normally get sucked into the craze. And this might be good for short term as it supports the price rise, but eventually there's no one left to buy and no one to support the further price rise. So that's what seems like have happened with the FAANG stocks. About a year ago, we had a launch of FAANG index futures, and this was one of the signals that the idea of FAANG stocks are going mainstream, and everyone is drawn into the FAANG mania. So that's how it is. Easy come, easy go. And the same thing happened with Bitcoins as well.
Wow, Bitcoins and FAANGs have a common thread. Who would have thought? Can you elaborate a bit more on this?
Yeah, sure. Bitcoin futures had launched on Chicago Board of Exchange on the 11th of December. Now exactly 6 days after the launch, Bitcoin stopped out. So you see that again the launch of the futures on Bitcoins acted as a signal that it's drawing a lot of attention, and from those levels Bitcoins traded at about 20,000 levels when the futures were launched, and right now it is trading sub 4,000 levels. So you can see it has dropped down by 75% from the all-time highs.
Wow, that's interesting. So what similarities do you see between FAANGs and Bitcoins and Indian IT stocks?
So it seems like all the three have a similar thread in common. First of all, they are all high-tech and technology-driven stocks or companies or ideas. And second thing is that the idea of going mainstream, like the idea of owning IT stocks has gone mainstream, just like idea of owning FAANGs or Bitcoins had been earlier. So whenever there's too much of attention, whenever it seems that almost everyone is interested in getting into similar kind of stocks or ideas, then it's a warning sign that everyone is becoming greedy, and when everyone becomes greedy, it's time probably to be fearful.
Absolutely, Apurva. So with the Indian IT index having gone up quite a bit in the recent past, so what trends are you seeing in the index right now?
So I have been calling for a bull trend in IT stocks for a long time. The first time I spoke about IT stocks going in an uptrend was way back in August 2017, when everyone was fearful about owning IT stocks, when they were down in the dumps, when Trump was very much against Indian IT companies. So that's when I turned bullish on IT stocks, and since then the Nifty IT index has gone up by about 50%. And so you see the IT index follows a 2-year cycle. So the cycle tops out every time in February. So Feb 2019 is the time when the cycle tops out, and for the next 2 years we will be in a fear cycle. So as you see, we are very much closer to the end of the greed cycle, and expecting the fear cycle to start in Feb 2019, which is 3 months from now. So instead of adding to IT stocks, I would probably look for bounces, to maybe reduce my exposure in IT stocks.
Thanks a lot, Apurva. That was very insightful. I'm sure our listeners can benefit from your insights. Now, Apurva is the best technical analyst and chartist that I know. You can log on to dailyprofithunter.com for his insights. Apurva is also a regular contributor to our daily free newsletter, Profit Hunter. You can log on to equitymaster.com to subscribe if you haven't already. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing.